Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. As you can see, the portfolio is doing okay. Despite what's happened on Friday, as you can see right now, I'm 48 and a half almost. I've got a bit of money I'm going to invest in today's video, so I'll share that with you, where I'm going to invest this £400 by the end of the video, towards the end of the video. But before we do that, if you are new to the channel, this is not a financial advice. What I'm doing here is sharing my journey just with everybody and be transparent. Okay, the companies I own in my portfolio are all of them Sharia compliant, including Visa. A lot of you have been asking me basically how is Visa Sharia compliant. Visa is a company that is a technology company. They don't really deal with the credit card side of things. They are the technology company, the company that behind the brains of that card, nothing to do with the transactions that take place. Okay, so I hope that kind of makes sense. So the company that I want to talk about today is this company. Okay, UPS has been my portfolio for a bit. Recently I bought 2 more shares. I used to own out just 10 shares. It's dropped quite a bit. So what I want to do today is I want to go through the fundamentals and see if this company is still a buy, if we can add to what we have already, or if we're not going to touch it for a long time. So I'm going to give you my opinion. I'm going to give you everything that I know about the company. But before we do that, let's check the markets. And as you can see here, it's kind of okay-ish. It's not that bad. It's not as bad as Friday, definitely. So I'm recording this video just Monday, and the markets are open right now. As you can see, it's moving all along. But yeah, all of these companies down, including UPS is actually down almost 2% today. It's been down quite a bit in the last few weeks, and I'll show you what's going on with that. So what I want to do first of all is just talk about generally the company. Okay, so I'm sure you know what UPS does, but they are a delivery company, so they deliver to customers across basically 220 different countries. They have basically they make about $9.7 billion in revenue every single year. They have loads of employees all around the world. And when you look at their financials, so revenue by segment, you can see majority of their revenue comes from domestic. So in the US, 20% comes from international, 18% comes from supply chain solutions. Okay, and then you've got revenue by geography, and that is majority of the money there comes from US, and only 24% comes from international. So that is the company, and as you can see here, they've got a lot of employees. They are in loads of different countries. They deliver. They are one of the biggest companies in the world when it comes to delivery side of things, packages and so on. Basically, obviously they have a competition with FedEx, but that's another company that recently came out and almost crashed the market, because they said their delivery situation is not as great as it was. They were letting people go. They were shutting down basically the different segments of their business. So because of that terrible news, the markets crashed on that day. But UPS is still fine, and they haven't actually released their latest earnings. But what I'm going to do now is I'm going to go over the fundamentals of the business, and then I'm going to share with you what I'm doing with the business later on in my portfolio. So as you can see here, it's currently trading $161 per share. It has an EPS of 12 and 47 pence. It has a market cap of $143 billion. So it's not a small company, and it has a wide economic moat, and it has a beta that's slightly above 1. So that means it's a little bit volatile than the market, but that's absolutely fine. Just above 1 is not that bad. Anything above 1.5, that worries me a little bit, but that's okay. P is very, very low. It's only 13, and basically 5-year average PE is only 17, and price to free cash flow is only 13 as well. But when you compare it with the sector, the industrial sector, right now we're looking about 19 PE, and right now this is 13. So that kind of tells us potentially this might be basically undervalued according to basically in comparison to the sector. And obviously then you need to look at companies like FedEx and basically their direct competitors, see how much they actually trading, because that's the reason we use PEs, to kind of give us an idea and so on. The 5-year, it looks 17, so that is basically, to me, that means it's slightly cheap, and price to free cash flows is in line with the current PE as well. Yeah, they have a nice dividend yield of 3.7%, payout ratio of 40%, and 5-year growth rate of just 6%. Dividend growth streak, so they have increased that dividend 12 years in a row. They have been paying longer, but they have increased non-stop for 12 years now. Dividend safety 69%, which is really good, and free cash flow, they have almost $11 billion. So they've got a lot of money in the bank, so I've got nothing to worry about when it comes to paying that dividend as well. To even not only pay it, to increase it as well, because we don't normally just buy companies because of what they currently can do right now, but we buying them because we want them to keep going in terms of increasing that dividend and keeping that dividend every single year intact. And obviously if they can increase it above inflation, that would be absolutely amazing, right? So, and currently inflation is about 10%, so 6% average for last 5 years is not that bad. In fact, I'm going to check it. I think recently they've increased it almost to 50%. I'm going to check that in a second. Yeah, they've increased it 49% February of this year. But on average last 5 years, basically they've increased 6%. In the last 20 years, they've increased it 9%. So they are doing really good in terms of dividend side of things. Profit margin is about 11%, operating margin about almost 14%, return on equity 75%, and total return in the last 10 years, we're looking about 11%. Current ratio is above 1, so that means they've got enough money to pay off that debt, basically the current liabilities, if anything happens to the business. Next 5 years, they're expecting 5.5 or 5.61% earnings growth every single year. And Simply Wall Street is actually saying right now it's 38%, almost 39% undervalued at the moment. Their price target is $267, and right now $161. Right now, I keep saying pounds because the pound against the dollar is actually just plummeted just the last couple of days. It's crazy what's going on in the UK right now. It's absolutely mad. Honestly, I've never seen anything like that. So we'll see. We'll keep an eye on the pound and see how it goes. But Morningstar is currently saying it's fairly valued. $186 per share is their target. And then TipRank is saying 28% undervalued at the moment. Upside, and then their price target is $206. Yahoo Finance is saying 210, and according to TipRank is actually moderate buy. I'll be honest with you, for me it's actually a buy, and I will show you exactly what I'm doing in a bit. Total revenue, okay, from the since 2018, we were looking for $71.8 billion in 2018. 2019 that went up to $74 billion. 2020 it went up 84. Despite COVID and everything, it went up about $10 billion, over $10 billion. Then the following year, okay, 2021, it even went higher, $97.2 billion. And right now in the last 12 months, we're looking about $100 billion in total revenue. That is absolutely ridiculous. Is that sustainable? I doubt it. And that's probably one of the reasons why FedEx came out and said, oh, maybe this is not going to happen, because they can see it. There might be a drop in shipping and drop in these kind of deliveries and so on, and that's absolutely fine. Even if it goes back to what it was in the 2018 and so on, that's absolutely fine. That gives us a great opportunity as a long-term investors, okay, to actually add to our shares and so on. So because there might be a little bit drop because of the recession, because people might not be, at the time 2018, 2020 and 2021, majority of us were still locked away. So what did we do? We went on Amazon, ordered stuff. Who's going to deliver it? UPS and other companies, right? Especially if you live in the US. So the net income right now, we're looking about 4.7 to right now almost $11 billion. So that has also increased. But 2020, the net income really dropped massively. So from 4.4 to 1.3. And that probably was a lot to do with COVID, right? Because when the lockdown happened straight away, I think it impacted almost every single company. Then the EBITDA, we're looking about 8.8 to right now $20.2 billion. So this company is absolutely amazing when it comes to their net income when it comes to their total revenue, the EBITDA, and so on. And free cash flow $6.4 billion to right now almost $11 billion. And again, it dropped in 2019 and then it picked up again 2020 and 20. So this is a kind of cyclical business. When the economy is booming and everyone is basically ordering products, this is the type of business that will do really well. When the economy slows down, obviously these companies will suffer because of what I just said earlier. Shares outstanding, okay, from since 2012 they have been increasing slowly. So the last 2 years they haven't actually bought more shares, but that's absolutely fine. So I think they've approved the share buyback very recently, and they have obviously increased that dividend as well. Right, so that's it for this company. Okay, quickly show you from a Sharia compliance side of things. In terms of business, it's absolutely fine. There's nothing wrong with that. In terms of interest-bearing debt, it was about 15.2%, and in terms of interest-bearing securities, we're looking at about 7.6%, which is absolutely fine. Now, so like I said to you guys, I own this company in my portfolio. I've had it for a while now, and I bought 2 shares of this company recently. I genuinely like the business. It can go down further. I'm sure something in the next few months, I'm sure it will go further down. But again, I'm a long-term investor. I don't really want to time the market. So what I'm doing right now is bringing my average down. And if it keeps going down, it's a quality business. So I'm going to add more of this business, right? So right now, my average is $181.70. So what I'm going to do right now is actually buy £400 worth of this company. That will give me 2.6331 shares, fractional shares. That's what I love about this what is it called, trading 212. Again, you can see the FX impact. So that's basically they're going to charge me about 60p whatever for me to buy this, okay, and that's sending to the market. And as you will see soon, hopefully my average will come down a little bit after basically they make that purchase. So the purchase, so it should go through in the next couple of seconds hopefully. So if we go back to UPS again, there you go, it's now reflected, and now instead of 181 is now $178 per share. Again, those little bit counts, okay, that every like they say, every little bit counts, right? Every little bit, you know, as long as I can bring that down, that's the most important thing for me. So that's it. So like I said to you guys before, I'm being transparent. That's real money, okay, that is in my account right now that I've actually spent. Now as you can see, I'm a little bit not concerned, I'll be honest with you, because I can still add money to the family portfolio, but I'm almost 50% utilization, and I still have quite a few basic months left, because remember, I get it, the next one is the 7th of April 2023. So yeah, so another 4 or 5 months, so another 6-7 months. What is it? Where are we now? October, November, December, and then yeah, 7 months left of the my ISA. So I still got 11,000 to put into the market, and inshallah, that again, my target has always been and will be, okay, to max out my ISA every single year, and that's what I'm gonna do. I've done it twice so far, and we'll see how that goes. And as you can see here now, the portfolio is almost £59,000, is now 8% up, and actually I made some changes to the portfolio which I will be sharing with you guys. I actually sold out two stocks, and completely sold out 2 stocks, and took that money and bought loads of different companies in the last 24, basically in Friday and today. So I will let you know that as soon as I basically get time to do a portfolio update. Have a wonderful day. Assalamu Alaikum.